How's it going, fellow traders? It's Magic Trader here, and this is the Forex market outlook for April 25th, 2018. So let's get down to it. Let me bring up my little tool. There we have. Okay, so we got some movement here in the markets. Monday starts off and we see some continuation of the momentum that we saw starting at the end of last week. And so we don't typically see Mondays begin this way, but you know, there was a good indication that it might start off this way. And last week I was mentioning that with the bearish momentum that we were seeing on the pound and the euro, we were most likely going to see that continuation continue into this week. So that's indeed what we did see. So I want to go through all the markets, and I want to see what moves were made on which charts and why they were made, and see if there's any opportunities to open up any trades. Okay, so let's take a look first at gold. So what do we see? So we see that gold is still keeping its range, all right, even though we're getting a very weak euro. It's still somewhat keeping this range, and I have mentioned this before in previous videos that there's a very good chance that gold just holds this area here until eventually, when euro does find support, we see a breakout to the upside. But for the time being, I am sticking on the sidelines when it comes to gold. I'm not opening up any trades because I still think that there is a good opportunity that we're going to see it drop down to there. But until that happens, there's really nothing else to see here. Okay, so let's go on to oil. So oil has made a nice rally upwards, and I was sent a message from one of the members asking me to take a look at oil, and I know that they were asking me to take a look at oil because of this area here. Okay, we have an explosive move to the upside, and now price was returning right back to that area. So in future webinars, we're going to break it down, and I'm going to give you an explanation the best way I know how for you to understand why this explosive move to the upside did not end up working. Okay, because as you can see, we have broken through that zone right here. So not every explosive move to the upside is going to work when price gets back to it. And that becomes the tricky part in reading price action. You must be able to determine when they hold and when they don't hold. Okay? Now this was determined to be an institutional demand imbalance, but not a zone. So what does that mean? So an institutional demand imbalance is that, yes, there was more buying than there was selling at this point. Okay? But one of two things. Is it clear that this area was institutional? Not necessarily. Okay? It's a demand imbalance. I shouldn't say institutional demand imbalance. It's a demand imbalance. So there was more buying than selling at this area, but was it necessarily institutional? Well, I can't say that it was institutional because, first of all, we've already made a really big move to the upside. Who buys after a big move has already been established? Is it institutions or is it retail traders? Typically retail traders, right? And can retail traders buy so much that they're able to take out institutional supply? Answer is no. So if there is no institutional supply that was removed, it's more likely than not retail traders that are buying here and not institutions. Okay, so yes, retail traders, hedge funds, they created a push to the upside, but when price gets down, are the banks going to hold up that area? No, they're not. So eventually what happens is price breaks through that area and causes a move to the downside. All right, so what am I waiting for here? You know, if the institutions bought here, okay, and we look at the weekly chart, and I am I gotta change this back to this here to be accurate, and I am forecasting a bigger move potentially up here. Who's going to bring that up there? It's the institutions that are going to bring it up there, not the retail traders, right? So after a big move to the upside, what will typically happen is they will allow price to exhaust, allow it to drop back down to where their last bunch of long positions have been filled in. So I'm waiting for a move like this. I'd be interested in buying down here, but I'm not interested in buying anywhere up here. Okay? If I see price gets down here and then institutional buying starts to be created, then I'll be interested in getting in. But until that happens, I'm not interested. I just got to wait on the sidelines and wait to see what happens. Okay? So US dollar, what do we see? We got that big explosive move to the upside right off of that daily area of demand that I pointed out last week on last week's analysis. And so now we got a nice push to the upside and we're heading right towards that weekly area of supply. That is going to be the first obstacle that price is going to have to make it through. And this isn't this weekly area of supply is an institutional supply zone. Okay? So I know that once this area gets taken out, it's going to establish some institutional demand down here. Okay? And that could eventually be what will propel price even further up. Okay? Because if the institutions are filling in long positions here, I will have that validated once this area of institutional supply is removed. Okay? Then I'll know the institutions are more focused on establishing demand than they are at maintaining supply. And once that's done, that will give me an indication that they will want to exhaust price and allow it to drop until we get a push for another push to the upside. That is only if they require the momentum to cause price to go up there. If they run out of steam, it'll drop. If there's nothing to cause it to run out of steam, it can go until the next obstacle up ahead. Okay? So, but we're still getting a very good push to the upside here. It's too late to buy now. We have to wait for it to settle down, and we have to wait for price to drop back down for the institutions to fill in their long orders again. Okay? Aussie US dollar. So, I took a long trade. I opened up a long position based on an institutional weekly demand zone. And so this one is a risky trade. And the reason why it's risky is because I want to go long the Aussie US dollar when obviously the US dollar is strong. So that kind of works against what I'm trying to have done here, right? But here's the big but, okay? In all my years of trading, what I've learned is that there has been many times where there was an institutional trade signal to open up a position like this one to go long, and yet my analysis was showing that, you know, in this case, for instance, the US dollar is coming in very strong, and I'm expecting it to get even stronger. So if I'm expecting the US dollar to get even stronger, why would you buy the Aussie US dollar? So what I have done many times in the past is I've canceled this trade only to watch price come, consolidate, and eventually make the move that I had forecasted was going to be made based on reading the charts and finding the institutional zones. And so when I've gone back to determine what was the causing factor that allowed this move to be made, even though there were things in the charts that I saw, for instance on this one, on the US dollar, I saw the momentum building and I saw that the charts were clearly suggesting that there was going to be a bigger move. What ended up allowing the trade to work out? And so what I've been able to determine is that regardless of what momentum you see on other charts, 95% of the times the confluences of the other charts will work in the favor of setting up a trade and allowing it to go with the flow of the markets. But there is those 5%. There is that 5% chance that you find yourself in a situation like this, where the institutional trade signal is clearly presenting itself, that there is a trade here, And you may not know exactly how it's going to work out, but you do know that this is a valid trade setup. So if you know it's a valid trade setup, you must take it. And through my experiences have taught me that even though right now this doesn't look like it makes much sense, because it's a valid trade setup and it's in my trading plan, I must take the trade. Okay? Now, if this trade does not end up working out, I will reanalyze to see if there is anything that I'm missing from my analysis. And if I've determined that there's nothing that I'm missing from my analysis, that everything was exactly the way it was supposed to be, and I took the trade and it was supposed to work out, but in this case it didn't because of other factors, then I'm going to be totally okay with it. But if I look back and I examine this and I understand why it didn't work out, and it's very clear to me what in my analysis I did wrong, then I will accept that as a mistake on my part. And remember, I'm not perfect. I get my analysis mostly right, but there are times when I don't. And when I don't let it bother me. Because what I'll end up doing is I'm going to learn from the situation. Whether it works or it doesn't work, I'm going to learn from it. And if I learn that I made a mistake, guess what? Next time I'm not going to make that same mistake. You know? I'll watch to see exactly what I did wrong here, and I'll see if it's something that's preventable. If it is, then I will write it into my notes and keep track of situations like this in the future. And if it wasn't preventable and it was just something that happens, hey, then that's fine too. Because let me give you a little teaching point here. Because what I see is that we had a monthly imbalance right here. Okay, price came in, tested it, and we got to move to the upside. And now we're coming down to test it again. What could potentially happen is we get a further test downwards of this area before the eventual move to the upside. That is a big possibility, because when an area is tested, what will happen is it'll eat all the demand up until this area here. Okay? So when price gets back here, that same level, all that demand has already been eaten. So what it needs to do is it needs to go further into the area that was untouched, where the orders are, and then it'll test lower, eat the new orders that are down here, and then cause price to move up. Alright? So that's very, very common. Okay? But there are many times where what will happen is you will get price to come in, test an area, leave, and then come back and test this area here, and then cause the move to the upside, right? Because this is where the institutions are filling in orders to cause price to move up. And then when they come back down, they eat the rest of, they fill in the rest of those orders, and they move price up. Okay? On the weekly chart, that is what I see. That this area is where the institutions were filling in orders because they removed an area of supply that was theirs. And it caused such a move to the upside, right? Price ran out of steam, right back down. So I'm expecting their orders to be filled at this level, and then move to the upside. Like I said, if it doesn't happen, that's fine. I will just try to figure out exactly what happened differently here. And moving forward, I'll become that much wiser whether it works or it doesn't work. Okay, but I don't recommend this trade for members because it's a risky trade. And I've warned everybody already. I'm getting into this trade because I have to follow my rules. But would I tell anybody else to take this trade? No, I would not advise anybody to take this trade because it is very risky. Okay, I know that many of you are taking trades that I'm taking, and that is your decision because you want to learn from your trades. But I do not advise that you take this trade. Okay, let me do my learning. What I would prefer. What is the preferred trade here is, see this trend line here? We wait for this trend line to break. We wait for momentum to shift like this, build, break this trend line, break through the institutional supply zone, and then test the zone that caused that removal, and then boom, then to the upside. That is the ideal way to trade this, because of the other factors that are in play. Okay, Aussie CAD, what do we see? We see that price is sitting deep within this tested weekly area of demand. Still no trade set up here. Aussie Yen, Really no trade set up here. Aussie Kiwi, I've set up a trade to go long right here. This is an institutional daily momentum shift demand zone off of a monthly imbalance, very similar to the Aussie US dollar, okay, with a nested area of weekly demand just about tested, okay, and this was an institutional supply zone that's been taken out. Momentum shift as a break of this trend line occurred. We got a nice close above this area here. So now this is a higher probability trade. Okay, even with the weaker Aussie, the Kiwi has been weak as well. So this could very much play out like this. Okay, because I do believe that in the long run, Aussie will be stronger than the Kiwi. So that trade signal is there. I posted it in the Telegram channel for your educational purposes. What you do with it is your decision. Okay, so let's go on to the next one, CAD Yen. So here, this is a mess, really nothing to see here. The Euro US dollar, so we got that drop from that area of supply that I pointed out last week. Boom. I mentioned that this was a foundational floor that has been rained on because the house has no roof any longer and rain has been pouring on this foundational floor, and it's getting weaker and weaker and weaker, and eventually it's just going to break and collapse, and we see that that's beginning to form here. So we have this week the ECB rate statement coming out. All right, so there's a couple ways that this could end up playing out. Okay, the fact that demand is in control, and we have a 4-hour demand zone nested inside. What we could end up seeing is, you know, once the data comes out, whatever the data is, whether they increase rates or they don't increase rates, there's going to be a reaction from the retail traders. So we may get a spike upwards like this, but eventually this area is going to be taken out. Okay, that's one thing I can tell you. All right, one thing I could tell you is that this area is just about to break through. And then we're going to get that push to the downside. So we may get that push up, or what could also happen, and there's a good likelihood of this happening, is we end up getting a spike up to this area here, and then we get a drop. But I think the likelihood of that happening is less than just a break to the downside. Okay, I'm already positioned short on many theme trades up here, so I'm in no rush, and I got targets here. Some targets have already been hit, so I've already made some profits on those trades, and now I'm just waiting. So whether it goes up or down makes no difference. If it goes up, I'll look to add to my theme shorts up here. If it goes down, I'll take profits on my trades. That's it. So you see how I'm positioned in such a way that whether price goes up or down from here, it makes absolutely no difference to me whatsoever. Okay? Because I know that if it goes up here, it's going to go down. And if it goes down, it's going to go down. Okay? Pretty much just that basic and simple for me. Okay, so Euro Aussie, there's really nothing to see on this chart. It's not presenting anything decent. Euro CAD is the same thing. Yeah, price would have to get lower for me to be interested in buying, and plus I want to see that euro find some support, and I suspect we're going to see a larger move to the downside, so this could eventually be a nice short, but nothing setting up just yet. Euro pound, same thing, it's a messy chart. Euro Kiwi, this could eventually do nothing because Euro and Kiwi are getting weak, so it's going to just balance itself out. Euro Yen, same thing here. Pound, this one was really good. We saw that drop right from the weekly supply zone here, which is what we were expecting. And now we have the very first institutional momentum shift supply zone right up here. Okay, so what does that mean? Well, if price makes a move to the upside here, I will be taking trades to short it to the downside. I haven't set up the trade just yet because I'm still waiting to see how things unfold before I determine that this will be a great spot to short. But so far this is looking very, very good. Okay, so pound short, I'm already situated short with theme trades, but this setup looks so nice to me that I'd be interested in opening up a full-size position here. Pound Aussie, really nothing to see here. Pound CAD, same thing here. Pound yen, nothing pretty, although we have a daily area of supply and nested at a weekly area of supply, so we could see a push to the downside. The only thing is that if the pound does get weak, we're thinking that the yen is going to continue to get weak as well, right? So it's hard to choose a direction on this one that will be profitable, so I'd rather just stay out. Pound Kiwi, so pound has been holding in relation to what the Kiwi has been doing, so therefore we're getting a push to the upside. And pound's heading towards 3 month, yeah, so very likely that the Kiwi is going to continue to get a lot weaker than the pound, and then there's going to be a push up towards this area here. So considering that, let's see what would be a good trade here. We got weekly supply. Alright, waiting for this weekly area of supply to get taken out. That's what we need to do. Once this area is taken out, we'll have new institutional demand right down here, and then if we get a nice move up, consolidation and drop, longs will be good from here up. Okay, so we'll wait. That'll take some time to play out, and I'm going to be patient because I don't want to get in this chart right now. It's messy. Sure, we could get this push right up here as well, a slight break, return down to these areas, and then a move to the upside. Once that happens, I'll have to examine the charts and see where these zones are situated, and then determine whether or not it'll be a good trade. So just being patient, but something to keep an eye on and wait to see how it plays out. US dollar, Japanese yen, what do we see? Boom, look at that. Daily supply taken out. Wonderful. This one is a beast, isn't it? Isn't this a beast? Look at that. Still such a bummer that I did not get filled in on this trade down here. Oof. So let's see here. That is going there. Yeah, so that one is the zone. Incorporate that. So this has been now taken out. My charts need to reflect the fact that it has been taken out. And now I got to draw in the new demand and wait to see if it becomes validated. Okay. So what I'm watching for is some kind of a push to the downside on the US dollar to set this up for another push higher. But right now it looks like the buying from the institutions is coming in very, very strong. So I'm just waiting for them to exhaust and then to allow price to drop into areas where they have institutional longs filled. So far this is the area here, but if we don't get a big push to the upside, then that means they're filling in longs, but they're just allowing it to exhaust right away. And so that won't be a good area to get in if they don't push price up even higher. I want to see just how strong this demand was. Okay, if they push it up, you know, up to here, and it's not capable of taking out all the supply that's over here, then that means this area is not going to be where they want to fill in more longs. I need to make sure that it's capable of taking out a lot of supply and then reversing itself downwards to fill in and recharge before, or to reload before taking price higher. Okay, but this could be eventually another nice trade to the upside. If we just switch over to the US dollar, yeah, so we're about to hit that weekly area of supply, right? So that hitting that area of that weekly supply could cause that move to the downside. And if we get that move to the downside, that will cause this to move to the downside, which could present some momentum shift and trade setups to go long, and then could present this move to trigger a short on the pound, and could present this move up to this here, where I will add to my theme shorts. So you see how everything is starting to come together, okay, of what could potentially take place in the next couple weeks or so. So let's take a look at US CAD. So similar situation here, hitting weekly bearish engulf, which could cause price to come right back down to this institutional area of demand and cause price to move up. Basically, this will be a great area to go long if price does come down here, because I've established that this is an area of institutional demand. They pushed price up, removed their own supply, and if they allow price to drop with the US dollar dropping, this will be a good area that I would be interested in getting long again. So I'm going to wait for a little bit more of a move to the downside and see what price action looks like, to see what kind of forces we are reacting to from the ups from up here, and then determine if this is still a valid institutional trade signal or not. Okay, so we're getting that drop that we were expecting on the Kiwi. Okay, we're getting that drop right towards this area, so eventually we could see a bounce, and that kind of ties in with what we're seeing in the other charts, right? US dollar about to hit supply and then reverse to the downside. This is about to hit demand and then reverse to the upside. So it looks like this is even in confluence with all the other charts. And take a look. We also got the Swiss franc hitting that tested area of weekly supply. We broke through that trend line, which I said pay attention and watch what happens, because that's where retail traders are selling. They were selling, institutions filled in demand and caused price to go even higher. Where's that demand? That demand was right here. This is where they filled in all those orders, those long orders, to cause that trend line to be penetrated as deep as it has. So if we get that nice consolidation up here and then a move to the downside, this could be potentially a nice long trade, but I'll wait for momentum to shift off this area. Why? Because if you take a look at the monthly chart, there's a monthly trend line, and the higher time frames always trump the lower time frames. Okay, monthly trend line could cause price to go down. It could. We'll need to see proof that that's not what's going to happen, because what could easily happen is, let's draw that monthly trend line just like this. Okay, what could easily happen is comes down, accumulate more, reload on long positions, and then a break of that monthly trend line, and then a push even higher. I think there's a very good chance that we see that, but we can't assume that that's what's going to happen. We can't assume that that's what's going to be in play. I could tell you that there's a very high probability that is what's going to happen, but I can't tell you that that's exactly what's going to happen. Okay, so that's it, guys and gals. So tomorrow is the ECB rate decision coming out at 7:45 a.m. Eastern Standard Time, and then later on in the day we have the Bank of Japan interest rate decision. So that'll be interesting to see what that does for the charts here. What we know is institutional supply has been taken out. So could price just continue higher from there? It could. The force of price right now is to the upside, but remember, the institutions need to let price exhaust. And so if price is already going through that exhaustion phase right now, it can be easily pushed by retail traders reacting to whatever the data comes out tomorrow. Okay? So keep that in mind, because that's some key information that I'm passing on to you right now. Keep that in mind. Let's wait tomorrow and see what ends up taking place, and see what we can learn from it. Alright guys, so that's pretty much it, and hope this was helpful, and if you have any questions, shoot me a message. Until next time, take care.